Most Americans have nowhere near enough money put aside to fund their retirement or live wealthy, which is why we're on the verge of seeing the biggest retirement crisis this country has ever seen. Now, while your friends and some of your family members and even the traditional media will tell you this is okay, you don't have to worry about it because you're in the same boat as everybody else, we're all screwed together, I'm here to tell you something a little bit different, because the reality is, guess what? If you don't get serious about your money today, nobody's going to be funding your retirement in the future. And if you rely on the government to fund your retirement, well, the unfortunate reality is the government doesn't have any money to pay for your retirement. And you might be saying, but Jaspreet, what are you talking about? Don't they pay out bigger social security checks every single year? Yes, but the problem is the government social security fund is also drying up. So in order to fund these bigger social security checks, the government has to print money to give you money, and when the government prints you money, the prices of things go up because that causes more inflation. So if you rely on somebody else like the government to fund your retirement, you get a bigger check, but the prices of things keep going up. Now you're spinning your wheels, and you're never going to have the chance to ever live your life financially free unless you raise some rich kids and then they decide to take care of you. So no, it is not okay to just keep going through the system hoping that someone else is going to take care of you. But the good news is, it's not impossible. In fact, today I'm going to go over the 5 steps, the 5 things you need to start doing today that you can start doing. That way you can build some real wealth. By the time you're in your mid-40s, you can put aside $500,000. That way you can really start building that wealth and putting money away to live the life that you want. The first thing that you got to do is stop doing what everybody else does. Let me show you a chart from a NerdWallet article. This article was published on June 20th, 2023, and the title is, "What is the average retirement savings by age?" And if we scroll down, what you'll see is that the median amount of money that somebody under 35 has put aside in America is $13,000. For 35 to 44 years old, it's $60,000. For 45 to 54 years old, it's $100,000. For 55 to 64 years old, it's $134,000. And for Americans 65 and over, the median amount of money put aside for retirement is $164,000. And what you need to remember about this is that this is the median, which means half of America has less than this amount of money put aside for retirement. I'm going to sound like a really old man now, but I'm going to give you my dad's advice, because the way my dad puts it is that America is the land of opportunity for immigrants. When you come to this country with nothing from a third world country, you're going to do whatever it takes to succeed. You're not going to blow your money, because that's one of the dumbest things that you can do, because you sacrificed your family, your life, your livelihood, your friends, your culture, everything that you know for a chance to succeed. But for Americans who are born and raised, and maybe your parents are born and raised here, or your grandparents are born and raised here, people who kind of get comfortable in this country, in the land of opportunity, America is the land of spending with credit cards, because you have the opportunity to build wealth, but you also have the ability to buy whatever you want, because America, unlike many other parts of the world, in fact, unlike everywhere else in the world, America has the most ability to qualify for credit and debt. In fact, go anywhere else in the world. You can go to great first world countries in Europe, and even there, people are not going into credit card debt and spending money that they don't have the way that they do here in America, because in America, we believe in credit. We believe in debt. We believe in the ability to buy things even if you're not ready to afford it yet, because that is the American dream for some people. Now, if you live that American dream to spend the way that everybody else does, guess what? You're never going to have the wealth that the some few people have. And now you can say, well, that's not fair. We were never taught to not spend our money. It is completely normal to go into debt to buy a car. It's completely normal to finance my iPhone. It's completely normal to have credit card debt. Yeah, it's normal, but it's not right. Just because something's normal does not mean it's the right thing that you should do. And so the first step, if you ever want to have a chance to put money aside, to ever build wealth, is you can't keep doing what everybody else does. I call this show The Minority Mindset, because if you keep doing what the majority of people do, you're going to end up like the majority of people, and financially, that means broke. And I don't say this as just words. I say this statistically, because the majority of Americans are broke. The majority of Americans are living paycheck to paycheck. The majority of Americans have no money put aside for savings. The majority of Americans have nowhere near enough money put aside to start building their wealth. Now, the simplest thing that you can do is just stop doing what everybody else does, meaning stop spending your money the way that everybody else does. Is this easy? No. That means you might have to downgrade from the BMW to the Toyota Corolla. And that can be one of the most painful things to do, because when you drive the BMW, everybody goes, ooh, nice car. When you drive the Toyota Corolla, everyone goes, oh, That's your car. And now you got to go from the ooh to the oh. And that's not an easy thing for a lot of people to do. But this is where you're going to have to make that decision for yourself. What do you want? What is more important to you? Do you want the car or do you want the wealth? Do you want the looks or do you want the generational wealth? And this is now going to be your decision, because now wealth starts here with your mindset before it hits your bank account. And when it starts in your mindset is what's going to control your spending. Your mindset is what's going to control what you do with the money that you get. Your mindset is going to control how you swipe your credit card. And this is where right now you got to get serious, where what is it that you want? What kind of lifestyle do you want to live? Do you want to look like you made it, or do you want to actually make it? And the reality, the interesting thing is the majority of people who look like they made it haven't actually made it. The majority of people who have the nice stuff, the fancy cars, the fancy vacations, and that are posting all over social media haven't actually done it. They're buying it with credit. They're buying it with debt. They don't have the investments. But if you really want to have it, meaning now you can go on whatever vacations you want, you can drive whatever car you want, you can buy whatever stuff you want without having to worry about the price, that means you're going to have to actually afford it first, which means you're going to have to make the sacrifice first. And making that sacrifice is that tough part. But this isn't rocket science on how do you make a sacrifice. This is a mindset game of how do you make that sacrifice. This is a mindset game of how do I change what I do. And that means you got to stop doing what everybody else does. And that is difficult, because as soon as you make that switch, people are going to look at you as if you're the one that lost your mind, as if you're the one that's going crazy. And this is where you might have to outgrow your friends and your circle. And that's difficult, because now you become the outsider, and it becomes lonely, because now everyone else is going to the club. Everybody else is going to party in Cancun. Everybody else loves blowing money on new cars. And when you're not doing it, now you're the outsider. Now, not only are you the one that's getting made fun of, but now you got to start to feel lonely because you're trying to do something different. But this is where you got to expand your circle. You can't constantly be around the toxic environment mentally, and you also can't be around the toxic environment financially. And this is where right now you got to figure out, how are you going to get there? And you have to now put yourself in an environment mentally that's going to allow you to grow. The second thing that you need to do, now we get into the practicals. The first part is the mindset. The second thing that you need to do is you got to stop the financial bleeding. Right now, you got to pay down your high interest debts. If you have credit card debt, you have to pay that down ASAP. I was just in California, and when I was there, I met this guy who had this exotic car shop rental where he had Lamborghinis, Ferraris, Rolls Royces, Maseratis, and he would rent these cars out to people who wanted to drive them around. And I got to know the guy and started asking him, how's business? And he says, business is better than ever. Business is booming. And I said, oh, what do you think is a contributor to that, and who's your clientele? I thought it might be, executives or athletes that comes in. And he said, yeah, we have some athletes and executives that come in, people that, get out of their private jet and they want to drive around in a Rolls Royce. But he's like, a big chunk of our audience are people, or customers are people who want to take pictures in our cars. So it's not people who want to actually rent out the car and use it for a week. It's people who want to use the car for 4 hours, take pictures and videos of them in a Rolls Royce, of them in a Lamborghini, that way they can post it on social media. And I was like, well, what are these people then doing with that content? Well, people do whatever they want with that content, but they're trying to create this perception. This is what social media is. 90% of social media is all a bunch of poo-poo. It's people that take content to make it look like they live a certain lifestyle, and then they publish it. Now, I'm going to give you a little bit of inside information, because I know a lot of people on social media, and I used to be in the entertainment business, and I know a lot of people in the entertainment business, particularly the Indian, Punjabi, my family's from a state in India called Punjab, entertainment industry. And by entertainment, I mean singers. So I have very good friends who manage some of the biggest names in Indian music. And I know what's going on behind the scenes. And I just had dinner with one of my good friends yesterday. And one of the things he's talking about is how sick and tired he is of this industry, because it's all perception. You have to look like you're rich, right? You're posting of yourself in these mansions, in the pool, with all these girls, living this lifestyle, when in reality, it's nothing like that. But he's like, we're always trying to sell this perception of a certain lifestyle, but it is so toxic for him now mentally that he's like, I can't keep working in this industry. I have to get out. And this is what a lot of social media is. Social media is in the business of perception. And if you fall into that perception and you feel like, man, what the heck? Everybody else has got the nice cars. Everybody else has got this beautiful wife or this beautiful husband who's always working out. Everybody else has this amazing job. Everybody else has this perfect lifestyle. And here I am here working my butt off and I don't have any of that. What are you doing wrong? And this is what creates so much toxicity, where we always feel like we're doing something wrong and we're chasing something that's not true. But this is where, again, it starts with your mindset. Building that wealth isn't so attractive. It isn't something you can show off on social media, but you got to decide, are you living for social media or are you living for your family and your wealth? And once you make that decision, it's going to be a lot easier for you to make the sacrifices and make the decision and do the hard things that will actually allow you to build the wealth. This then brings me to number 2, which is the practical part now, which is pay down your high interest debts. If you have any sort of high interest debts like credit card debts, you need to pay it down ASAP, because this is skinning you alive financially. If you have $5,000 worth of credit card debt, which is less than the average household credit card debt in America, but if you have $5,000 worth of credit card debt and you only make the minimum payments, do you know how much that credit card debt is going to cost you? If you're only making the minimum payments, that $5,000 is going to cost you the $5,000 you got to pay back, plus about $10,000 worth of interest. Because credit card debt isn't 5% interest rates. It's 15, 16, 17, 18, 19, 20, even 25% interest rates. So if you have $5,000 worth of credit card debt, you're making the minimum payments, which is what a lot of Americans are doing. It's going to cost you 3 times that amount to get out of that debt. This is why it is so expensive. It is so costly to buy things that you cannot afford, that aren't paying you with money that's not yours. Not just because now you're going to have to pay the money back, but now because you're going to sacrifice your ability to build future wealth, because today's money that you're earning today isn't able to go out and be invested. It isn't able to go out and build a business for you. It isn't able to go out and build your savings for you, but it has to go out to pay interest for the stuff that you bought last week or last year. And this is where right now, you got to get aggressive on paying down this high interest debt. And by aggressive, this means not spending money and working to earn more money to pay down this high interest debt. One of the most interesting questions I get here is I meet people, I'll go to conferences and people will tell me that, Jaspreet, I got $8,000 of credit card debt, $10,000 of credit card debt, and I'm trying to figure out how do I invest my money into the stock market to buy this rental property the right way. And my initial response is, whoa. Let's talk about this. The average stock market return, historically, 7 to 10% a year. Same with the real estate market. You're not guaranteed to see that return. It might be more, it might be less. You might even lose money. But when you have credit card debt, you're guaranteed to pay 15 to 25% in interest, which means if you pay off your credit card debt 1 year earlier, you're going to get a guaranteed 15% return. Now, it's simple math. Paying down your credit card debt 1 year earlier, 2 years earlier, 3 years earlier is a guaranteed return. And it's a double-digit return. Investing your money into stocks, into real estate, is no guarantee. And the average return is single digits, maybe 10%. So if you have any sort of high-interest debt, what you need to do right now is get aggressive to pay it down. Dave Ramsey says if you have credit card debt, you better not see the insides of a restaurant. It's kind of true. If you have high interest debt, you got to listen to what Dave Ramsey says. He's the best person when it comes to how do you pay down debt. Is you got to get aggressive with what you do. And the reality is, until you pay down your high interest debts, you're never going to have the ability to build wealth. It's like walking around in shackles. It's like having a 2,000-pound weight on your back trying to do anything. So what you need to do is, number 1, is you got to stop spending money on your credit card. And then number 2, you got to aggressively pay down the credit card. Now, there's a lot of tactics, a lot of tools, the debt avalanche or debt snowball method that you can take to pay down this credit card debt quicker. I have other videos on my channel where I go over how to do that. But for the purposes of this video, before you go and do anything else, you got to pay down this high interest debt, which brings us to number 3, putting your money to work. Once you have the mindset to build wealth and you pay down the high interest debts, now you have the ability to build true wealth, because in an ideal world, what's going to happen is you're going to have money coming in and some money going out, and there's going to be some money left over. And the money that's left over can either be saved in a savings account or it can be invested. Now, your savings are not there to make you wealthy. I know we're all taught growing up that you got to save 10% of your income because that's what's going to make you wealthy. Well, the reality in today's economy is saving your money is not going to make you wealthy, period. You cannot outsave inflation. You cannot outsave the money printer, period. But that does not mean you shouldn't save any money. Your savings are there to protect you against an emergency, because if you get fired tomorrow, if your business goes bankrupt tomorrow, if you break your leg and you can't go into work tomorrow, if something happens and you cannot go into work and you don't get paid anymore, you got to have some savings to protect you. Likewise, if something happened, you need some money to pay for the broken car, for your kid's broken arm, for the broken window. You need money for that because you don't want to go back into credit card debt. So you need to have some savings for that. But at the same time, if you want your money to grow, you want your wealth to grow, you need to be investing your money, because the reality is you could save $10,000 today, work really hard to save that $10,000, but then what's going to happen is 5 years from now, the $10,000 isn't going to have the same buying power as it does today. I mean, just take a look at what it means to be a millionaire today. Being a millionaire, having $1 million, is a lot of money, but it's nowhere near how much $1 million was back in the year 2000. It's nowhere near how much $1 million was back in the year 1973. This is where now understanding that saving your money is not going to make you wealthy, because your savings are being eaten away because of inflation. Even if inflation falls, inflation is still there. And that makes the value of your savings smaller and smaller and smaller. So now you want to save some money, somewhere between 3 to 12 months worth of expenses. Take the savings, put it into a high interest savings account. There are a bunch of high interest savings accounts online that today, at the time of me recording this video, are paying 4%, close to 5% in interest rates. They are FDIC insured. And yes, I said 4 to 5% in interest, not the 0.05% that most banks are paying, most traditional banks are paying. So look into a high interest savings account. Make sure it's FDIC insured. Make sure you understand the insurance limits, and then you can use these high interest savings accounts to start earning some interest on your savings. But then you also got to grow this money, because you can only save your money so fast. If you're making $100,000 a year or $50,000 a year, $500,000 a year, there's only so much that you can save. And this is where you need your money to grow along with your efforts to save this money. And this means now you got to put your money to work. This is what investing is all about. What wealthy people are doing is not working for a bigger paycheck. Wealthy people are working to own more assets, period. And the reason why is because your paycheck is fleeting. It depends on your salary, which means it depends on you. Wealthy people don't want to have a lifestyle that depends on them going to work. And so what you need to do is start thinking the way wealthy people do. And you might be thinking, but Jaspreet, I can't do that yet. I have to work. Fine. But now start doing what wealthy people do, because if you keep doing what everybody else does, you're going to end up like them. But if you keep doing what wealthy people do, well, now you got a better chance to end up like the wealthy people. So if wealthy people are working not for a bigger paycheck, not just for their salary, they're working for more assets. The question is, how do you own more assets? Assets are investments. Investments are things that you buy for the purposes of making money. So now what you need to be doing is working to buy these assets. What are these assets? It could be stocks. It could be real estate. It could be buying businesses. You don't need a ton of money to start doing this. You can start with as little as $100. But the whole goal here is you're going to start putting money aside, and this money that you put aside will be growing. Now, the thing that makes everybody upset here is, well, what happens if we see a recession or a market crash and the value of my assets fall? Well, let's take a look at this. Take a look at any market crash. Take a look at any recession in history. We had one in 2020. We had one in 2008. We had one in 2001. Every time we've seen a market crash, asset prices fall, but the market has recovered each and every time. So the people that sold out because they got scared, they saw the markets fall, lost everything. But the people that held on, or the people that bought more, were able to build more wealth. So yes, recessions happen, market crashes happen. The markets don't go straight up. Whether it's stocks, real estate, crypto, businesses, it does not matter. No market goes straight up. But it's the people that hold on to good investments and buy more good investments at a discounted price that can build wealth. And this is where your job should be, learning how to invest your money. Are you going to be investing into stocks? Are you going to be investing into real estate? Are you going to be buying businesses? Are you going to build your own business? Where is it that you're going to invest your money? How do you invest your money? And then how can you get the best returns possible? Because now you're working your job. You're working to build your business. You're working to make money. Now, you're not spending all of your money anymore. You're saving some money and you're investing the rest of it. Now, when you're investing this money, the question is, how can this money work just as hard as you to work to grow the amount of money you put aside? You could be putting aside $1,000. Now, this $1,000 is working to grow while you work to get another $1,000. So you work to get another $1,000. Now you have $2,000 working to grow. You work to get another $1,000. Now you have the $2,000 that have grown to $2,050. And then you throw in another $1,000. So now you have $3,050 that's working to grow. Now this might become $3,075. And then you put in another $1,000. And you keep growing that. That way now you have more money that's working to grow for you, and the money that's there is also growing at the same time. This is where there's two things you need to work on. Number one is paying attention to what's happening in the financial news, and then taking that and applying it with the financial education of how do you invest your money. On the financial news side, this is where why I created Market Briefs, which is my free financial newsletter to keep you up to date on what's happening in the top finance and business news. It's an easy way for you to understand what's going on in the economy, the housing market, the stock market, the crypto market, and the global economy into a fun, witty, and easy to read email. You can read the email in less than 5 minutes every morning, and it's completely free. So if you have not joined Market Briefs yet, go to briefs.co/market. That's briefs.co/market. And I also got the link for you down in the description below. But this is where you also got to work on your financial education. Learn how to invest, learn where to invest. And the best way to learn, besides reading books, watching YouTube videos, taking classes, is by doing it. Yeah, you're going to lose some money. You don't got to throw in every dollar that you have in the beginning, but you got to do it. You cannot bypass the experience. I have made so many mistakes. I've even talked about them on YouTube. I talked about my worst real estate deal ever on this channel. It was so painful. I lost so much money. I lost so much sleep. It was one of the most stressful periods of my life. But that one deal taught me years worth of real estate knowledge in one terrible real estate nightmare. Yeah, it was not fun at the time. Yeah, I had no idea what I was going to do to get out of it at the time. But that's how you learn, that's how you grow, and that's what pushes you to keep going. And that's where, again, goes back to number one. You got to have the mindset right. You got to have the mindset to keep getting back up when you get pushed down, because it's hard. Building wealth is not easy. I know people like to talk about the 6 steps to making 6 figures in 6 months, but that's a bunch of poo-poo. And what we're talking about here is reality, right? I'm not here to get you to like me. I'm here to help you be better with your money, period. And so you got to understand that there are things that you're going to do that are difficult. And one of them is you got to be willing to invest your money. You got to be willing to take risks, and you got to understand that losing is a part of it. But the goal is to make way more money than you lose. This brings me to the fourth thing that you got to do, which is adjust your investing strategy and adjust the aggressiveness of your investing strategy. See, there's 3 factors that will determine how wealthy you become. Number 1 is how long you invest your money for, time. Number 2 is how much money you invest, the dollars. And number 3 is the return that you get, the percentage and growth of your money. How fast can you grow your money, the velocity of your money. And the reality here is there are ways to get a better return on your investments. And if you get a 5% return on your money, you're not going to have as much wealth as if you got a 10% return on your money. Now, there are ways and strategies that you can use today to get a better return on your money, but that's going to require more time and potentially more risk. But in order for you to mitigate some of that risk, you're going to have to learn about investing. So what do? Learn about different investing strategies. Guess what? I have multiple investing strategies. I have what's called a passive investing strategy and an active investing strategy. In the stock market, I have a passive strategy where every week, every Wednesday, cash leaves my checkings account and it gets invested into my portfolio of ETFs. ETFs are funds that give me exposure to a broad group of companies. So every Wednesday, I have money leaving my account that gets invested into the stock market. That's going to get invested into funds that give you exposure to dividends, to the S&P 500, to innovation, and to emerging markets. This is passive. I don't monitor this. It happens automatically. It's consistent. It is completely passive on my end. I also have an active strategy where I'm investing in individual companies. This takes more work and more time because now I'm researching companies. Sometimes I research companies that I don't invest in because then I do some research and I decide not to invest in it. After I invest in the company, I still keep researching the company. I still keep listening to the earnings calls. I'll still keep studying the financials. This takes more work and more time, more risk, but the upside is way more. Because now if I can invest in a good company, now I'm not trying to get the 7, 8, 9% returns that you see in the overall market, but sometimes you can see 20%, 30% returns. Is it consistent always? No. Sometimes I'm going to lose money because I'm going to invest into the wrong thing. I have lost money before. But there are ways for you to increase your returns if you get more involved. Just like that with real estate. I have bought turnkey real estate deals, which are properties that are sometimes fully rented out. I bought a home recently, or not recently, but last year, that was already had a tenant in there. That was turnkey. It didn't really take me any work. I walked through the property, looked at the numbers, everything made sense. I paid the check, and now I already got the rent cash flow coming in because the tenants were already there. That's a turnkey deal. The return on that is much lower than when I go out and I find a property. Let's say I bought a single family home that was completely beat up, where there's holes in the walls, there's a rat running around in the kitchen, it smells like doo-doo in the home, the basement is breaking, it needs a lot of work. Now, if I could come in and see this, I might be able to buy the home for 40% below market value, depending on how bad it is or where it is. And now I can come in, fix it up, and still own the home for way below market value and then rent it out. More risk, because now I got to come in and actually do the work. I got to come in and actually get the tenants. I got to come in and turn the property around. But the potential for more reward. And so now if you look at your numbers, go through a compound interest calculator. If you've never looked at one before, go to Google, search compound interest calculator, and there are so many free calculators there, and just play with it. How many years are you going to be investing your money between now and your retirement? How much money can you put aside, and what type of returns are you going to get? Now just play around with it. You can't change the time. You can't change how old you are. You can't go back in time and start investing when you're 21, although we would all love to do that. But instead, what you can do is you can adjust that return. That's one thing that you have complete control over, and that control starts with your financial education. And the second thing that you have control over is how much money you invest. And the way that you have control over that is, number one, controlling your spending, because the less you spend, the more you have to invest. But the second thing that you can do to invest more money is work to earn more money, which brings me to the fifth thing that you need to do now is you have to work to earn more money, period. Now, I've talked about this on a few different videos, but the reality is our economic system is changing. We're living in a completely new economy. It's not the same as our parents or our grandparents. In the 1970s, we lived in a one-income household where one income was enough to support buying a home, buying a car or two, buying a vacation a year, funding college, and living life and putting money aside for retirement. Today, here we are in an economy where we have two-income households, and the two incomes are not enough, or it's struggling enough to buy a home, to buy a car, maybe two, to buy a vacation, to pay for college. Americans are struggling today when you have two-income households, when Americans were able to do the same with one-income households 50 years ago. So now if you fast forward, what's life going to be like in 20 or 30 years, to think that the two incomes today are going to be able to support it really is a bunch of fairy tales, because how is that going to happen? The reason why we have two-income households today that are struggling to survive is because of inflation. And inflation is not going away. So now if you project what is life going to be like 10, 20, 30, 40 years from now, you got to start preparing for that. And that means you're going to have to start creating your own income. If you're not happy with where you are financially, if you're not happy with your income, if you're making enough income, then you can completely skip this part. But if you feel like you're not making enough money, you're going to have to work to earn more money. And it's better to start today. Now, the good news is America is the most conducive place to create a side hustle. The good news is it's more accessible than ever to create some sort of side income. The bad news is it's going to take more work, but it's possible. So how do you do that? Well, start by learning. There is so much free education on YouTube, which didn't exist 10 or 15 years ago. YouTube existed, but this amount of free financial education, business education, entrepreneurial education did not exist. Start reading books on building businesses, on earning money, and then just start doing it. It doesn't have to be this super drowned out complex thing to start earning money. Just go out and start doing something. Start making some more money. But the key here is, why are you working to earn more money? Are you working to earn more money to buy another vacation, to drive a faster car, or are you working to earn more money to have more wealth? That's the question that you have to ask yourself. And if you're working to earn money, to invest more aggressively, that's what's going to allow you to build that wealth sooner rather than later. And if you can do that, that's going to give you more freedom, right? That's the real flex. People talk about flexing their car, their vacations, their fancy restaurants that they're going on social media. That's the flex, right? But the real flex is having freedom, having the ability to take your spouse out to dinner or lunch whenever you want in the middle of a Tuesday because you can. Having the ability to spend time with your kids. Having the ability to spend time with the people that you love and do the things that you want. That's the real flex. You might not be able to show it off on social media the same way that everybody else can with their Gucci belts, but that's what's going to give you that real ability to live your life. Now, if you want to have the nice things too, there's nothing wrong with that, but you got to work to earn more money, that we can have more wealth, that we can have the freedom and the nice things as well. But it starts with changing your mindset and then changing what you do with your money. But you can't change what you do with your money if your mindset is still broken. There's no defined path that you have to follow if you want to make more money. In fact, the first billionaire that I ever met was a guy that built his business selling rocks. I was studying for the medical college admission test when I was in college at the University of Michigan in Ann Arbor. And I was in the library pretty much every day reading my books, trying to figure out how do I get into medical school, which I did not do, obviously. But I was in the library every day, and then a little while into it, I started to see this guy sit next to me, and he was over there on the computer doing his own thing. And eventually, a few days into it, we started talking. And he told me that he was in town looking to buy some real estate projects. He was from California. And I was like, oh, that's cool. And then we kind of became good friends in a couple of days, just talking about random stuff. And then he was showing me a picture on his computer. And he's like, what do you think of this? It was a plane. I was like, that's really cool. He's like, I'm thinking about buying this one. And I looked at him and I was like, what are you talking about? He was like, yeah, I have this plane. I'm kind of getting bored of it, but I want to buy a second plane, something a little bit bigger. And he was showing me the second plane that he was thinking about buying. So naturally now I got a little bit more curious. And I asked him, what do you do? He said, oh, well, I don't really do much now. I just invest in real estate. I built this business, this rock business that he sold for over $1 billion. And that got me curious because I never heard of anybody making money selling rocks besides that one guy, Gary Dahl, who built a business selling pet rocks and who made millions of dollars selling the pet rock. So I started asking him more questions. What do you mean selling rocks? And apparently, this guy who was sitting next to me in the library buying real estate in Ann Arbor built this business selling gravel, rocks, and stones. And then he continued to grow and became the largest distributor of rocks, gravel, and stones in the entire Midwest. And his business grew so big that now he's able to buy planes, invest in real estate around the country, and live his life the way he wants. There's no set path to how you can make more money. There's an unlimited number of ways to make money. Somebody became rich creating pens. Somebody became rich building the ink inside of pens. Somebody became rich building microphones. Somebody became rich building cameras. Somebody became rich being behind the camera. Somebody became rich editing the stuff that's on camera. There's no set way to do that. And in today's day and age, I know it's easy to get confused where people associate more followers with more money, that if I want to make more money, I just have to have more followers. And that is a correlation, but not necessarily a causation. And it's funny because I was having a conversation with a friend of mine who was trying to start a business, and he was asking about different businesses that people do. And another friend of mine, one of my friends is an engineer trying to start a business. Another one of my friends has a very successful business, but a very small social media presence. So the engineer then starts asking about this other business and how this other business is doing. Now, this other business has a very small social media presence, but it's doing millions and millions of dollars a year in sales. And that's where my engineer friend kind of lost his mind. What are you talking about? How can somebody with 5,000 Instagram followers be making millions of dollars a year? I thought you needed Instagram followers in order to make money. And Instagram followers, YouTube followers, TikTok followers can help you make money, but you don't necessarily need the quote unquote followers in order to make money. What you need is an audience, you need customers, you need distribution, but there isn't a direct need for social media followers. Now, what does this mean? Does this mean you shouldn't be on social media? No. Social media can accelerate the sales that you have. Social media is so valuable to grow the distribution, to improve your media presence, to grow how much money you can make. But there's so many ways to earn more money. And now if your goal is to earn more money, the real question is, what kind of value can you provide? What service can you provide somebody else? How can you help somebody else? And when you can solve that problem, the next question is, how can you scale what you do? Because if you can't scale it, there's going to be a cap and a limit to how much money you can earn. But if you can figure out how to build processes and systems to scale it, now you have the ability to earn more money. There was a video that I saw, I think it was on TikTok or Instagram the other day, and it was a guy walking around asking people, can you make a better burger than McDonald's? And everybody said, yeah, I can make a better hamburger than McDonald's. And they said, well, how come you can't make more money than McDonald's? And this is where many times people assume that just because I have a better product, I got a better burger, that you should be able to make more money. But the difference between that product and what McDonald's does is that McDonald's has built operations. They've built systems that has allowed their business to scale. Scaling now is where the money comes in from a business. You got to have some sort of value, some sort of product, some sort of service that you can offer people that people are willing to pay for. The next thing is, how can you make this thing scalable? Which means something that you can teach other people to do, or you can build a product that doesn't necessarily rely on you to build it. If you can start to build something scalable and it's something valuable, now you have real potential to make unlimited amounts of money. And now the question is, how do you grow it? Because ultimately, if you want to make more money, if you want to create your own product, if you want to create your own side hustle, if you want to build your own business, there are two things you need. You got to have the product, and then you got to have the customers, period. If you have a product that people are willing to pay for, now you got a business. If you have a product, but no one's willing to pay for it, you don't have a business. If you have customers, but no product, like you have a social media following, but no product, you don't have a business. So this is where now, if you want to be able to maximize how much money you can make, you just got to fill in the blanks. What is this product that you can provide? How do you get the customers? And then how do you scale it? Period. If you can solve that problem, you will have the ability to make more money. If you can't solve that problem, you will not be able to make more money. And so now the question is, how do you build that product? What is the service or value that you can provide? Now look around you. What are you good at? What do you like doing? And what problems can you solve in the world? Everybody has problems in the world. You have problems. I have problems. Everyone has things that they deal with where we wish something was a little bit more convenient. We wish something was easier. We wish there was a product there to help us with something. Now, your job is to figure out what is that thing? How can you make it easier and better? Then, once you create that product, the question is it scalable? Is it growable without necessarily you? If it requires you, you're going to have a hard time scaling. But if you could do something that doesn't necessarily rely on you, well, now you have the ability to scale. For example, let's say you're a good designer, but your designs are solely based off of your artistic talent, as opposed to some operations or plans of how do you design images. If it's designs based off of only what's inside of your brain and you cannot teach somebody else, you're never going to be able to scale it. The maximum amount of money you're going to make is limited to whatever output that you can do. But now, if you can come up with a system of how to design, number one, you meet with the company and you ask them these 10 questions. Number two, you take these 10 questions, the survey that they answered, and then you go through this systematic formula that you created. Number three, you build colors off of this formula that you created. Number four, you go through processes to start building designs based off of that. Number five, you have a brainstorming session with the team. Number six, 3 people go and make designs together. Number seven, now when you guys make the designs together, your team comes together to come up with the best design. They vote on it and then they create a new design. Number 8, you present it to the client. Number 9, you make feedback. And number 10, you present and build the final product. If you can build systems like that, now you have built something scalable. Now the question, once you have the product, is how do you get the customers? Now this is another art. How do you get the customers? Well, social media is the most accessible way to do that today. Because if now you can show the world that you have this design business, you show people how to design, you show people the designs that you're doing, and potential customers see it, well, now some of those people might actually call your office. They might call you. They might email you saying, hey, could you design me something? Can you build me something? So social media makes that distribution part, about finding the customers part, much more accessible. If you don't want to do social media, well, then you can also do paid advertisements. Facebook, Instagram, Twitter, TikTok. Nowadays, the commercial, the traditional advertising is dying because people are moving on to the digital advertising. But this is where now you can incorporate different ways of trying to find customers. You can get customers through word of mouth. People who use your service Give them a bonus, give them a referral commission check, give them a discount on the future orders if they bring you another customer. You can do billboard advertising. You can run commercials on TV. You can do radio advertisements. You can buy posters on buses. There's an unlimited number of ways to find the customers. But the question is, what's going to be the way that's going to produce a profitable result for you and that's going to drive you the correct customers? But at the end of the day, the first thing that you got to figure out is how can you provide value to somebody else? How can you increase somebody's production, lifestyle, convenience, help, reduce their pain, reduce the anxiety, reduce something, help something, give some value to somebody, and then turn that into something that's scalable, and then find the customers to buy it. And if you can do that, now you have a real business. And the interesting thing about being alive in today's generation is you can even do it in reverse now. You can find the customers first and then create the product after. I built my brand here on the Minority Mindset channel. I started this channel on accident. My goal wasn't to build a business here on Minority Mindset. I was busy building a different business. I created content here as a way to help other people learn the things and not get screwed over the way that I was. Well, my channel started to grow. And as my channel started to grow, I started to spend more time here on the Minority Mindset channel and less time in the business that I was running. It was a sock business. And then as the channel started to grow, that was when the entrepreneur in me started to come back out, because I'm not a content creator at heart. I'm an entrepreneur at heart. And that's when I then created Briefs Media as a way to help provide financial news and education to starting off my viewers here on the Minority Mindset. Now, no one's here required to grow to Briefs Media. No one's here is required to go and sign up for Market Briefs, my free financial newsletter. No one here is required to do anything in Briefs Media, but I can talk about my company, Briefs Media, here, and if somebody's interested, they can go there. So now I created a free funnel for me to talk about my business, and I get customers, clients, readers from the audience that I've built. But this is where now the question is, how do you find the customers and how do you get the product? Nowadays, you can create the customers first. You can build the audience first and then build the product second. Or if you already have a product idea, you can work to build the product while also trying to get the customers. But the advantage of social media is you have the ability to start getting customers without having to spend money in advertising, because you can have the best product in the world, but if nobody knows about it, it doesn't do you any good. Which then the next problem is, if you create a good product, how do you get people to know about it? And unless you have deep pockets, unless you go out and raise money, unless you have raised debt or venture capital, it could be very difficult for you to go out and get people to hear about your product and go to your website and buy your stuff. But if you can build the audience, well, now you have people that are already there, ready to buy, sometimes already willing to buy. I mean, it was kind of funny when I first started this channel. The reason why I realized, wow, there's a lot of potential here, was people would leave comments on my videos. This is in the early days before I had 100,000 subscribers. People would leave me comments saying, Jaspreet, can you please create some class? Can you please create some sort of coaching? I want to give you my credit card. These were some of the comments that I was receiving. And that's when I realized, whoa, there's actual potential here. And the question now is, again, what product? What are the customers? How do you combine these two? Because that's what's going to allow you to scale how much money you're making. And the reason why this is so important, again, is because of the changes that we've been seeing in our economy and the changes that we're going to continue seeing, because we're going through a shift in our economy right now. Americans are spending more money than ever before, even if they don't have the money to spend. And this is a sign of how strong our economy is. At least that's according to economists who say that not even a recession can hurt our spending here in America. And what this article says is that there are three main factors which are contributing to the growth and strength in spending here in America. Number one is the money printing that we saw. Number two is the Social Security program, which has been growing thanks to money printing. And number three is people borrowing more money to continue spending. Now, the reason why this is so important to understand and that we're going to dive into this for is because everybody's talking about how strong our economy is because consumers are spending so much money. But at the same time, this consumer spending is a double-edged sword, because if consumers spend too much money, that means eventually they're going to have to pull back on their spending. And when they pull back on their spending, and businesses are reliant on consumers spending more and more and more money, that's when you can start to see a real shakeup in the economy. And what you'll see is that there are real flags with why our consumer spending is so strong right now and why people believe that not even a recession can hurt consumer spending. So let's jump right into this. And let me start by talking about number one, which is how the money printing in 2020 and 2021 is still affecting our economy today. Now, by now, if you've followed anything that's been happening in the financial world over the last few years, in 2020 and 2021, the government and the Federal Reserve Bank worked to print and spend trillions and trillions of dollars and gave this money to businesses, corporations, and people, which gave people more ability to spend, which allowed businesses to create more jobs, which allowed businesses to raise salaries, and which allowed people to pay down their debts, which allowed people to build some investments, and which allowed some people to build their savings. And what this article talks about is the impacts of this money printing today. It says that massive fiscal support during the pandemic and constraints on consumer ability to spend allowed households to accumulate a large stockpile of excess savings, and consumers have been tapping on those funds since the summer of 2021. Now, this is where you're probably thinking, Jaspreet, we're in the middle part of 2023. It's been over 2 years. How does that spending and money printing still affect us today? Well, take a look. Households have likely depleted more than half of their savings buffer, but there's still somewhere between $500 billion to an excess $1 trillion in spending ability out there, meaning people still have more ability to spend because of all the money printing that happened. And you might be saying, but Jaspreet, that was 2 years ago. How does that still affect us today? And I think the difficult part that a lot of people have of understanding is how much money was actually created during the 2020 pandemic. Because when the 2008 crisis happened, when we were talking about a potential $1 trillion stimulus package back in 2008, people were losing their minds, and that was considered impossible to do a $1 trillion stimulus package, so things had to be cut. In 2020, not only was a $1 trillion stimulus package considered not enough, there were multiple multi-trillion-dollar stimulus packages created and spent, in addition to trillions of dollars worth of quantitative easing, in addition to trillions of dollars of infrastructure packages that were created and passed. The amount of money printing that we saw in 2020 was many multiples of what we saw during the 2008 crash, when people thought that we had printed more money than anyone could have ever imagined. And we took the 2008 money printing to a whole new level in 2020. And so apparently, according to economists, and even banks have been talking about this, consumers still have more ability to spend due to still today in 2023 excess supply of capital from the money printing in 2020 and 2021. But it gets even more interesting when you take a look at number two, which is the Social Security aspect. Here's what the report had to say about Social Security and consumer spending. And by the way, if you want to read the whole article, I also got it for you down in the description. But what it says is that generous cost of living increases for recipients of Social Security benefits have raised consumer spending. Now, this one is really interesting because if you've looked at what's been going on with Social Security has been drying up. Number one, because people are living way longer, so Social Security has to keep paying out people's benefits longer and longer and longer. And then number two, because the cost of living is rising, so Social Security benefits have to rise faster than expected. But take a look at what it says next. Social Security beneficiaries received an annual 5.9% increase in benefits in 2022, which was the largest in 40 years. And then they saw an 8.7% increase this year. And this new income, Social Security checks for old people, is of growing importance in the economy because as the elderly population increases, more people have more spending ability. Now take a look at this. We have a growing elderly population, growing people that rely on Social Security. This is a huge chunk of the consumers in America. And what this article is saying is that because we have more old people in America that are getting bigger checks from the government, they have more spending ability. But the reason why they're getting more checks is because we have more inflation. The reason why we have more inflation is because we saw more money printing. And the way that the government is funding this bigger Social Security checks is by printing more money, which causes more inflation. So if you start to look at this from a true wide lens, what you see is the inflation caused the need for more Social Security checks. The inflation was caused by more money printing. So more money printing in 2020 and 2021 caused the need for bigger Social Security checks. Now the government has to fund bigger Social Security checks through more money printing. And so now because people have bigger Social Security checks, they can spend more money. And they have to spend more money because the prices of groceries, rent, and everything in between is so much more expensive. And this is a big part of our growing economy, is the spending that old people have through Social Security checks. And because Social Security checks are growing, they're able to spend more money, which is growing the economy. And they're getting the source of this money from the government. And the government doesn't have the money to fund this because the Social Security fund is depleting, and the way that they're funding it is through more money printing. So you start to see the circular argument where you have the inflation problem and you're fueling the economy by producing more inflation, which creates a bigger inflation problem, which starts to create more economic issues. So this is something you want to pay attention to, because a lot of people have been reporting about the retirement crisis that's going on. What is a retirement crisis? That more and more Americans are entering retirement with not enough money. So what are they relying on in order to fund their retirement? Social Security checks. But the Social Security fund has been drying up because now the money you're paying into your Social Security fund, because anytime you get paid from your salary, some of your money is going to FICA taxes. What is that? Social Security taxes. Those Social Security taxes that you're paying today, especially if you're under the age of 45, aren't going to fund your retirement. They're going to fund somebody else's retirement. They're funding somebody's retirement today. And this is where now, in order to fund these growing Social Security check requirements, which are necessary due to the higher inflation, the government has to create more inflation. So this is a definitely indicator of something that you want to be paying attention to, because, well, the inflation problem has not ended yet. And the third factor that's contributing to this booming consumer spending is debt. Take a look. Households have also been boosting their borrowing to maintain spending in the face of high inflation. Many households paid down credit card debt after stimulus checks were sent out, but now we've seen credit card debt jump by 14% in 2022. We here in America live in a credit-based economy, and our economy runs on spending, which means the more money you spend, the more money somebody else gets. If you spend more money, somebody else is getting richer, period. Now, we live in a credit-based society, which means you don't have to just spend how much money you earned. You have the ability to spend based off how much debt you qualify for. So if you go to work and you earn $1,000 and you keep the $1,000 in your pocket, that's not stimulating the economy. That's not making somebody else rich. But if you take the $1,000 and you go and you spend all of it at the Nike store, at the Gucci store, at the Lululemon store, well, now you're making somebody else rich. Because now these businesses are making money and their profits go up. They can hire more employees. They can create more jobs. But because we live in a credit-based society, banks will look at you earning that money and they're going to say, oh yeah, you got $1,000. How about we give you a $2,000 line of credit? So now you have the ability to spend the $1,000 that you earned plus the $2,000 worth of debt, your credit card debt, whatever line of credit that you have. And now you have $3,000 worth of spending ability. So now when you go to Gucci, Louis Vuitton, wherever, and you spend the $3,000, now the people that are getting that money are getting even richer faster because you have more spending ability. And what happened during the pandemic was all this money was printed and sent out, which meant people's debt balances from across the board went lower because some people used their stimulus checks, unemployment checks, free money from the government to pay down their debt. So people's debt levels went down. Well, now what we've been seeing is incomes have gone up, partially due to the inflation. So now people's incomes went up and their debt levels are down here. And now banks are saying, hey, you don't have any debt. You have more income. You're more credit worthy. How about we give you bigger credit lines? How about we give you more home equity lines of credit? How about we give you other options to borrow money? And now what we're seeing happen today is more and more Americans are digging into debt to continue funding their lifestyle or to continue the ability to live. Because now normally, people would have already had debt and they can't keep going deeper into debt. But because people got this like running rewind on their debt levels in 2020 and 2021, they have the ability to rack up way more debt today because, well, a lot of people just zeroed out their balances and now they have to rebuild it back up. And they have more room to go because if incomes have gone up, your credit worthiness have also gone up. But the problem with this is there's a breaking point. Because you can't just keep borrowing money forever. Eventually, you're going to max out your credit card. Eventually, you're not going to be able to pull out more money out of your home. And when that happens, now people are going to have to make a decision. Are you going to work to earn more money to continue funding your lifestyle? Are you going to dig into your savings to keep funding your lifestyle? Or are you going to have to cut back now because the bank is pulling the strings back? And when that starts to happen, that's when you'll see a big shift in spending, because there will be no other option. And this is that concern that a lot of economists are looking at. It's because they're looking at the economy and consumer spending, which is booming today. It's causing profits to go through the roof. It's causing markets to grow. It's causing everything to be good. But that comes with the time span too. It's a ticking time bomb because debt levels are rising. Inflation is still there. Interest rates are rising. People are spending like crazy. People are digging into the savings to spend. But eventually, people can't keep digging into the savings anymore. Eventually, people won't have the ability to go deeper into credit card debt. I mean, we've been seeing debt levels rise at some of the fastest levels we've ever seen. And part of the reason is because the prices of things have gone up so much. And the other part is because people want to keep spending money. And when that hits its tipping point, that's when you're going to see a real shift in the economy. And so this is where you have to understand, number one, how does our economic system function? We live in a spending economy. The more money somebody spends, the more money somebody else makes. But that spending isn't just spending based off of money. It's a credit-based economy, which means people spend not based off how much money they've earned, but based off of how much credit they qualify for. But when you live in a credit-based economy that relies on spending, there's also a limit to how much spending somebody can do when they tap out their credit limits. Because now when you tap out your credit limits, people have to stop spending and then they have to start saving. Because now they have to start working to pay down their credit card debts. And when that happens, and people start taking their $1,000 that they earn and use it to pay down their debt, and they put this money back in their pocket, instead of going to Gucci, instead of going to Lululemon, instead of going to Chipotle, well, that's when businesses start to see the revenues get hurt. And when businesses start to see the revenues get hurt, well, that's when they have to start cutting back. And when they have to start cutting back, that's when you start to see more pain in the economy. When people start losing their jobs. When people start losing their jobs, that's when you start to see that negative spiral. Now, normally what has happened in the past when you see this type of downturn is the Federal Reserve Bank will start cutting interest rates, to start inflating, to start stimulating. But the difficult part today is we're already facing the high inflation problems. That's what makes this economic situation that we're in right now so unique. There's still spending ability out there. Consumers are still spending. We're still seeing that. Why? Well, this article says 3 reasons. Number 1 is because of all the money printing. People still have the ability to spend. Number 2 is because of the Social Security check growth. And number 3 is because the ability for people to go deeper into debt. Well, eventually, when spending slows down, that's when you're going to start to see the shift. And this is where your job as a financially smart person is to understand this, be financially educated, be prepared, meaning be smart with your money today. 2023 is not the year for you to go out and finance a new truck. Be smart with your money today. That way you can protect yourself, but then also put money aside to be able to capitalize on opportunities that might come your way. Because the reality is when you see economic crises, when you see turns around in the economy, when you see market downturns and crashes, that creates opportunity to build wealth, buy more investments on sale. But the only people that can capitalize on it are the people that were, number 1, financially educated to see the opportunity, and number 2, are prepared with cash to seize the opportunity. If your goal is to truly become wealthy, and by wealthy, I mean not just driving around in a paid off Toyota Corolla, I mean having the nice things that you want, having the vacations, having the lifestyle that you want, you're not going to achieve that by just getting a 3 to 5% raise every year or by maxing out your 401k. I'll show you. Wealthy people become wealthy not because of the income